I grew up in Las Vegas, of all places. One of the few people to escape that city and make it to the valley. My father was an engineer at the nuclear test site. My mother worked in commercial banking. I went to a very large public high school with 3,000 kids. Our graduating class was 750 people. And I spent all my time, even in the heat of Vegas, outdoors. So rock climbing, mountain biking, camping, hiking, all that kind of stuff is how I grew up. And then I went to the East Coast for college, and all that went out the door pretty quickly. So that's kind of my upbringing.
That's good to know about the childhood, because that's important for this fireside chat.
It is important. We give a lot of thought at Homebrew to the founding story and the genesis of companies, and so we really like to think about why somebody is starting the company that they're starting, and many times the why is related to some experience that they had growing up or during college or in their work life, and so backstories are super useful.
So when you grow up, did your parents have any expectation on you?
No, I was lucky. Unlike most Indian parents, they didn't expect me to be a doctor or engineer. So, in fact, my father encouraged me not to be an engineer because he was an engineer his entire career. So he probably screwed me in the long run, I guess. So no, there were no expectations of me. I was expected to do whatever my passion was, and I think the challenge there was I didn't know what my passion was for a really long time.
And talk to us. So what was your first job, and what was your worst job?
My first job and my worst job were the same.
Okay, good to know.
I worked at a miniature golf center, and in addition to serving snacks, I was responsible for cleaning the bathrooms, including the women's bathroom, which, as you know, has a special box in it, and that box was the bane of my existence while I was doing that job. So not the most fun job ever.
So you're pretty happy now, I guess?
I do not clean female bathrooms or men's bathrooms any longer.
Good. So you were first at DoubleClick, and then you went to Google, and then you left for Better Ventures, and then you work at VP at Twitter, and now you've co-founded Homebrew. I mean, all this seems pretty impressive. Well, pretty impressive. Yeah. And it seems all makes sense. So I can't help but recognize some pattern here, right? So talk to us, like, how did you plan your career? Did you always wanted to start a VC firm when you work in tech? What's your thinking process there?
No, I think the only plan to have when planning your career is not to have a plan. I think if you try to over-architect your career, you'll end up in a dead end. And so I always tell people the only two things to optimize for when you're trying to figure out what to do, what company to work for, what you want to do with your life, are optimize for two things: optimize for people and problem. If you get those two things right, and getting those two things right is really hard, independent of anything else. But if you get those two things right, then good things tend to happen. And so I've always been the type that has kind of done what feels right at a particular moment in time, surrounding myself with people who I really trust, who are going to allow me to do my best work, who are going to give me rope to hang myself, who I can learn from, and working on a problem that really intrigues me, and I feel like I wake up each morning and go to bed each night thinking about it. And it, title hasn't mattered, comp hasn't mattered, location hasn't mattered. Like, those two things have served me well, and that's why I say, like, I've been fortunate. It's better to be lucky than good. And I think you kind of do make your own luck some if you listen to your heart and focus on those two things.
And based on this pattern, do you see yourself back being an operator again?
I don't know.
We'll see.
I take my own advice, so
right.
We'll see. This is, Hunter and I started Homebrew with the idea that this is the last job we'll ever have. So I think that's the current plan, but never say never.
And you guys know each other when you work at Google, right?
Yeah, we met at Google in 2003. Hunter joined a little bit after I did, and we worked on the same team for my years 2 through 4, and his years 1 through 3.
Right.
And we developed a very tight relationship both at work and outside of work. And after we moved on to our respective jobs, past Google, mine at Battery and Twitter, and his at YouTube, we continued to do angel investing together, advising together, spend a lot of time with our wives and families together. So when it came time for each of us to figure out our next step, we were lucky that the timing coincided where we were both leaving our jobs. And before we even knew what we were going to do, we decided to work together again, focusing on people. And then secondly, we figured out what kind of problems we wanted to focus on. And then after all that, we figured out that would take the shape of Homebrew. But we didn't know any of that when we had breakfast one morning and decided we were going to work together again.
That's good breakfast.
Stacks. Can't go wrong with stacks.
So when you work at Twitter, because Twitter has been in the news recently, going through some change and challenges, when you were working at Twitter, what was the biggest challenge you were solving over there?
I have to pick just one. The biggest challenge was cultural.
Okay.
I think because of the way that Twitter grew, which was mostly, kind of epitomized by the fail whale, Twitter grew up with a culture of playing defense rather than offense. And so everyone was afraid to break things. So it was really hard to change that to a culture that said yes instead of a culture that said no. And I think that was the biggest challenge. There were lots of other challenges related to the product and usage and all those kinds of things. But I would say first and foremost, like with every company, the challenges and the solutions start with people. And we had a cultural problem related to people.
And is that one of the reasons that you decide to leave Twitter to think of something new to do?
It was a contributing factor.
Okay.
There were lots of reasons that I felt like I didn't want to be at the next phase of the company.
Right.
I think everyone should always kind of evaluate where they are with each phase of development of a company and make sure that it fits their priorities and vice versa. And for me, the next phase of Twitter wasn't one that was as exciting to me. It didn't get me up in the morning every day. And so it was time to go do something else.
And but through Twitter, through DoubleClick, you were executive at these companies. You were having operation skills. Now you're a VC. You used to be a VC at Battery as well. So how important do you think operation skills to a good VC? Given that startup best practice evolve, relatively fast.
Mm-hmm.
How do you see that skill playing the role in terms of VC investment?
Yeah, I don't think it's the day-to-day skills that you learn as an operator that are valuable for very long, maybe for 12 or 24 months, but it's the mentality and the thinking. It's being able to relate to somebody who is building a company, having been in their shoes before, having managed teams, having dealt with personnel issues, having thought about culture and values. So it's less about, knowing what the best, bug tracking tool is today, or even, what the right product development methodology is. It's more being able to coach people through kind of the higher level issues and having them, founders, feel like there's somebody who's on their side and relates to the challenges they're facing.
And for you, what's the best way to work with founders to add value if it's not offering operational advice? How do you usually work with founders?
Yeah, we never presume that we can add value to founders, right? It's their companies and they're the smartest in their domain. We're usually lucky to tag along for the ride. So the way we approach our work at Homebrew is pretty simple. It's the founder's company. They know the priorities and challenges. And so we say that in any moment in time, we just want 3 pieces of homework from you. And that homework can be anything. It tends to fall in the categories of product market fit, organizational design, go-to-market strategy, those kinds of things. But, we've done everything from help people find new office space and find new counsel to obviously doing fundraisings to we helped one CEO get his daughter into private school because it was taking up a lot of his time and his wife was freaking out. But that's kind of we approach it is, we want homework. And the reason that model works really well is because if we know kind of what's top of mind for the entrepreneur, we get a really intimate view into the challenges of the company and what that entrepreneur is focused on. But then it also tells us what they're not focused on, what he or she is consumed with that they should maybe is not consumed with that maybe they should be consumed with. And so we're able to be both reactively and proactively helpful as a result.
I mean, that's interesting because I mean, at the end of the day, you want to help founders optimize their time so that they can focus on the startup. I guess at Homebrew, when you guys make investment, how personal, how much you have to get to know the founder. I mean, get to know the founder is that, hey, they have a kid, the kid's going to a kindergarten, that level. I mean, how do you guys see it, the founder VC relationship?
Yeah, so there's a lot of answers to that question. I think the easiest way to describe it is we tell every founder or founding team that regardless of what happens with this particular company, our goal is to work with you for the next 2 or 3 decades, right? And you can't have that kind of relationship unless you get to know that person very, very deeply. Most of the time when we invest, the company is between 2 and 4 people. So we're the 5th and 6th people around the table. So there's no way of avoiding having a close relationship if you're going to be helpful to that company and that company is going to trust in you. So people are fundamental to the way we invest and the way we think about the world.
So this question is from the meetup community. Steven asked this question. And I have a bunch of other questions from the community as well. So if some is bad, it's not my question. So Stephen asks, so how can VCs improve its success of their investments? I guess it's kind of broad question, but what if you have to focus on 3 things to improve the success rate? What would you focus on?
I mean, the VC business is pretty simple in the sense of what's important in it, right? You have to see the best opportunities, right? The founders who are the best in the world have to come find you one way or the other. And you have to do a good job of reaching out to them, making yourself known. So you have to see the best opportunities. You have to do the best job picking the right opportunities, right, and winning those in what is increasingly a competitive market for capital. And you have to do the best job being helpful to those founders and entrepreneurs and helping them create value. In this business, if you ever think you're done working in any of those areas, you're dead. So we think of Homebrew as a product that we're always iterating on and trying to improve. And so, we have OKRs in each of those areas that we try to deliver against. And we're always working to make sure that, everything from our top of funnel to the bottom of the funnel is improving from a process standpoint.
And let's talk about that. So what's your OKR, right? Like what kind of metrics that you measure as a VC firm or internally? What would you focus on beside the obvious, I guess, the deal flow, the deal number?
I mean, the number one metric comes down to, I guess, the way we think about our business is that we get paid last, right? If our founders do really well, then our LPs do really well, and then we do really well. So the first and most important metric is, are our founders happy, right? And that's pretty easy to measure because it means that every founder is willing to act as a reference. It means that, if we do a customer satisfaction survey or net promoter survey, like they're all saying 9 or 10. So those things are pretty easy to measure. And if, we're doing a bad job, we typically hear about it because we talk to them all the time. So that's the main metric. Everything else just takes too damn long, right? The feedback cycles in VC are between 7 and 10 years after you make an investment. So the only thing you can count on in the interim is not, paper write-ups or valuations. It's the satisfaction of your founders. And that, that's kind of how we try to operate the business.
And I like how you guys has a list of potential ideas that you would like to fund. I
wouldn't go that far. They're not necessarily things we would like to fund. They're things we're curious about.
Yeah. And that's great. So if you follow Satya on Twitter, that's his number 1 tweet, right? Oh, no.
No, that's Hunter's pinned tweet. My pinned tweet is, I think, a post I wrote about what it takes to raise money.
That's right. And we'll talk about that as well. So you put out those ideas that you're curious about. So how do you balance that with a founder? I mean, with some founders whose idea that's not on your list, but might turn out to be big. I guess I mean,
99.9% of the things we fund aren't on that list, so it's kind of a non-issue. That's our wish list, and in terms of things we're curious about, doesn't necessarily mean we're going to fund it. Doesn't necessarily mean we're looking only for those companies. In fact, I don't think we certainly haven't funded anything that's on that list because we would have taken it off. But we don't think about it that way.
And how do you guys develop your thesis? Talk to us more about your bottom-up thesis.
Yeah.
How do you come to that conclusion?
Yeah, so as I talked about before with people and problem, the problem that Hunter and I focused on very early on, before we even thought about Homebrew, stems from our personal experience building AdSense and YouTube and Twitter. We really saw those as technology platforms that helped level the playing field between the head of the tail and the long tail, right? Kind of allowing the little guy to compete more effectively. And the reason that that's possible is because of technology, right? Technology has gotten cheaper, more flexible, more accessible. And so when we refer to the bottom-up economy, it's this idea that technology can finally impact individuals, groups, and industries that historically haven't been able to leverage technology. And further driven by the fact that as we move to a more knowledge-based economy, there are entire categories of jobs that are going away or becoming lower paying. And so there's also economic necessity that drives people to find new ways to derive income leveraging technology. And so that was the problem that we wanted to focus on, and kind of everything that we invest in is tied to that. But it really stems from our own personal experience.
And I guess, with some VC firms, their focus is pretty, I guess, could be broad. If you ask a VC firm, what do you invest in? They will say, oh, consumer enterprise. Mm-hmm. I mean, pretty much like everything, right? Like either consumer or enterprise. And on the other end, that you have firms, like Homebrew, like Foundry Group. You guys have a overall thesis, overall thing about how you view the world. Do you think, given 10 years, 20 years from now, that thing might change? Or how often do you want to revisit that thing?
Yeah, I mean, we decided to focus on this problem because we think it's long-lasting, right? This trend of technology impacting industries and people is not going away in the next couple of decades, so we feel pretty good about the thesis. And the other thing I'll say about it is we really do treat it as our focus and kind of where we spend the majority of our time, but it's more a white picket fence than a barbed wire fence, right? We're opportunistic like everybody, but the bottom-up economy is kind of where we focus and where we want to build our brand. And if you're a founder that's building a company within the bottom-up economy landscape, we want to meet you and chat with you.
Would you agree that venture capital is a commodity business?
I think capital is a commodity business. I don't think venture capital is a commodity business. You can treat it as such, right? There are plenty of ways for you to raise money without involving what I would regard as a professional investor who's providing more than just capital. But I don't think that venture capital is a commodity business, because commodity businesses scale and venture capital does not scale well.
Okay. So James asked this question. So how do you set aside Homebrew from other VC firms?
Yeah. Again, we thought about this long and hard even when we started the firm. So it comes down to kind of tactics and kind of our strategy. Tactically, we take a very focused investment strategy. We only do 8 to 10 investments a year, which is a pretty small number for the seed stage. We want to be the investor of record, so we write the large check in the seed round, co-lead or lead the seed round. We take a board seat, and we roll up our sleeves and get to work. And then, again, everything that we invest in is tied to our thematic focus around the bottom-up economy. So we think just the intersection of those two things is different. And then we also believe that the seat that we're fighting for around the table is the investor of record that comes from an operating background, right? So I'd say that our strategy around investing in kind of mission-driven founders, in products that do one thing super, super well, and in markets where the pain being addressed is large, acute, and valuable, tied to this intersection of focus and theme, we believe sets us apart. It remains to be seen whether that's true.
And how many people heard of a Hunter Walk? That's probably not correct. People don't raise their hand. So we know Hunter Walk blog and tweet a lot, and he has pretty cool avatar profile pictures. Mm-hmm. Is there any reason that you're not using an avatar profile picture?
I haven't changed my avatar since 2007, I think. So.
And no plan to change that.
Yeah, and Hunter and I marched to different drum beats.
So from scale 1 to 10, how important is tweeting skills to a good VC?
I don't think it's that important, honestly, because I think you have to be good at it. It's not enough to just do it, and Hunter is particularly good at it, I would argue. So for him, it's a competitive advantage. I think for lots of VCs, it's noise.
And let's talk about this. So you guys are two-partner fund, and you guys have the history of working together at Google, and now you're doing this new fund. Do you guys always see each other eye to eye in terms of investment criteria, investment? Do you guys always agree with each other? What's the dynamic
we had
like?
a thread on Twitter about this over the weekend, if anyone's interested. We make decisions by consensus, right? There's only two of us, and because both of us work with every single company, and we don't do deal attribution, it's not my deal or Hunter's deal, we think it's really important to invest by consensus. But that said, that doesn't mean that we necessarily both agree about the investment out of the gate. In fact, most investments we don't. We used to describe it when we were fundraising as we're both baseball players with naturally different positions. He sees the world from the pitcher standpoint, and I see the world from the catcher standpoint, but we end up in the same place eventually. So that's kind of how we think about it. Is usually if it's a company that we're both really excited about out of the gate, at least so far, I think our data would suggest that maybe that's not the best investment.
That's interesting. So Jing asked this question: what's one piece of conventional wisdom in the startup world that you disagree with?
That's too broad. One piece of conventional wisdom. I don't know. Does anyone have a piece of conventional wisdom they want me to talk about?
What's something that you believe that are true that most people you think they don't agree with?
I don't know. I don't know. Let's come back to that one. I gotta think about it.
All right, we'll leave that to the end.
Yeah.
Matt and Chris asked this question. So what's one startup that you have the opportunity to invest but didn't, but wish you had?
The honest answer, that's too early to tell. We've been investing for 2.5 years. There are a bunch of companies that have raised a bunch of money. We would argue we still made the right decision because they're not long-term sustainable businesses. So I don't know. We don't know the answer to that yet. It's something we track. We track every investment we made, every investment we passed on, ones that we lost, what's going on with them. But of all the things that we've passed on, there's been no liquidity yet. And ultimately, that's the measure of a good investment.
So there is a follow-up question against that. So if there is none, what's one startup that you invested in but wish you didn't, and why?
We love all of our children equally, even the ugly ones.
So Daryl asked this question. Homebrew was started in 2013. So since then, how do you see the venture landscape change, including more recent, valuation talk, bubble talk? How do you see it?
There's more capital now than 2.5 years ago. The power has definitely shifted to the entrepreneur side, even more so than 2.5 years ago. And I think that there's been a loss of discipline in the market, both on the founder side and on the investor side. But these things go in cycles; they always do. I don't know if we're at the top of the cycle or on the way up in the cycle, but these things go in cycles, and so I think we'll revert to something more normal at some point. But the reality is it's cheaper than ever to start a company. More people than ever want to start companies, and more people than ever want to give those companies money. And the vast majority of that money is at the seed stage, at least, is not going anywhere. So it's a wonderful time to be a founder for those of you who are founders.
So with there is so much capital at early stage, and there is a lot of capital at later stage as well. For early stage investors, do you think that the ever increasing valuation hurts the model of return for angel investors and micro VCs?
I think by definition, higher valuations lead to worse returns. right? That's kind of how
Yes.
the math works.
Right.
So yes, it's worse for everybody, except maybe the founders, though. That's only if there's actual liquidity at valuations that they grow into. I think for the most part, you're going to see founders who have raised at high valuations on very aggressive terms with preferences and all these kinds of things, pay the penalty for that.
And would you encourage your founders to, I mean, how would you advise your founders to look at valuation? Is there certain range, or like what's your advice to them?
I wrote a blog post about this a little while ago. I think the only two things you have to accomplish when you raise money are, one, get money in the bank, and two, maintain optionality. And the higher your valuation goes, the more money you raise, the less optionality you have. And so optionality just means like you're taking on risk. And are you prepared to take on that next level of risk? And I think for most founders, they may believe they're ready to take it on, but they're not. And so it's our job to help them kind of understand that. And so there are many companies in our portfolio that have raised money, but at lower valuations than they had the option to. And we think that that was the right thing to do for those companies and for those founders, particularly as we believe that the later stage financing market is going to continue to tighten up, as it has started to in the last few months.
That's interesting. So let's take that question further a little bit. So you stepped into venture world back in 2000s, work at a VC firm. And
1996 was my first VC firm.
Wow, that's even more back then. But now, if you could travel back to 1999, 2000, what would you tell the younger Satya?
I would probably give myself the advice that I gave you earlier, which is don't try to over-architect your career. I think I probably thought too hard about what other people thought and what was the kind of right path. And if I had listened to what I wanted to do, I probably would have been in the Valley then instead of coming out here in 2003.
You wouldn't told yourself that to short stocks like pets.com to sell those stocks before?
I didn't own any pets.com, so
okay.
I didn't have to worry about it.
Oh, let's talk about now.
I don't think I owned any stock back then. A DoubleClick stock eventually, yeah.
So let's talk about now. If you could short one unicorn company right now and make a lot of money by doing that, which one would you do?
I can't answer that. Come on. I mean, we have friends who are investors in all these companies, and
but would you short one? Like, would you agree? You don't have to name company.
I mean, honestly, it's also impossible to tell because you don't know what the cap table really looks like.
Right.
You don't know what the preferences look like, all those kinds of things. So, but I can't answer that question. You know that.
All right. Well, offline. Do you think Bay Area startups spending on basic costs like rent and recruiting are going off the charts? That's becoming a red flag to you? What's your view?
I don't know if it's a red flag as much as it's the kind of par for the course in today's market, right? So I think you have to think long and hard about whether it makes sense to establish home base in San Francisco proper. I think you have to think long and hard about how you build your teams and networks for recruiting. And I think you got to think long and hard about what more do you want to provide beyond, the office space and salaries. Because, I think Chamath said this recently in an interview that, if you're spending money on brick walls and, I don't know, vitamin water or something like that, like at the seed stage or early stage, like, you're fucking yourself. And I agree with that. Like, that's part of, a job as a founder and as a VC is to enforce discipline and focus. And I think that's a potential signal for lack of focus if your capital is being spent in those ways.
And if a startup is not based in the Valley, what's your advice to them? Would you encourage them to move here? It doesn't really matter to you.
We focus on San Francisco and New York as the core geographies for a number of reasons, but we think we can get critical mass. A third of our portfolio is in New York. So it's less important to us that somebody is in the valley and the company's in a valley. It's more important to us that the company is based where they are for more than just because the founders grew up there. Right? There should be some strategic reason for the company to be based in Salt Lake City or LA or Austin or Boulder or wherever it is. But the beauty of what's happened in the last decade is that there's incredible information and access for what it takes to build a company all over the place. And so now it's easier than ever to build a company anywhere. The things that are missing from outside the valley are abundant sources of capital and a long established and large network of people who've been there and done that. And those two things are missing. So if you value those things and are willing to deal with the expense of the Bay Area, I still don't think there's any better place to build a company, but it's entirely possible to build great companies anywhere.
In Silicon Valley, people, we talk a lot about, failures should be celebrated. It's okay to make a mistake. Do you think should startups celebrate failure? And what's the fine point of making mistakes and not making mistakes?
All right, so that's conventional wisdom. I will disagree with.
There you go.
I think failure sucks. Like, who wants to fail? And celebrating failure sucks. What is great about failure is that you learn from it. That's the only value in failure. And so I'm of the opinion that if you fail quickly, that in and of itself is not a good thing. If you fail quickly and learn something that helps you succeed, then that's a good thing. So my view is that a lot of companies spend too much time being busy and not productive. And what I mean by that is you're not productive if you're not eliminating risks in your business or you're not learning about how to build your business. This has been a blog post that I've been waiting to write because I see it more and more with companies that are starting in the last 2 or 3 quarters that they don't have a hypothesis about what they're doing, and they're not trying to validate a hypothesis. They're not moving forward with a focus on answering some key questions that'll help them figure out whether their business makes sense or not. They're just doing stuff. And as a founder, as an investor, as anybody who works, it's easy to waste your time and not have anything to show for it. And I find that there are a lot of startups out there that are interested in the process of, or the kind of going through the motions of building a company without really taking the steps to learn and to iterate and to prove that they have a company worth building.
And I guess that's kind of tied to the current cycle that we're in, when everything is good, valuation go up, a lot of capital, a lot of startups want to be in the game, and that's kind of the one factor that contributing to that. But I want to talk about the founder side. So, how do you categorize the best founders you would love to work with? And especially we talk about this, qualitative terms, right? You want a founder mission-driven. You want a founder that's super convicted. How do you tell that? What's your way?
Yeah, for us it comes with personal stories, right? We like to back founders who we regard as missionaries, not mercenaries. They're trying to solve a problem that's so personal that they've experienced the pain firsthand and they can't stop thinking about. And it's even more important than actually building the company. We like founders who have a very strong point of view but are flexible in their thinking. So they have a hypothesis that they want to test, but they're willing to admit that they're wrong. We like founders who value culture and process and thinking about communicating that very early in a company's life. We like founders who like to hug. We find that honestly like a very positive signal. So we want to, like I said, we want to work with people who we feel like we're going to enjoy working with for the next 20, 30 years. The benefit of doing something like Homebrew, where is we get to pick exactly who we work with, and we don't take that lightly because it's a real blessing, and we haven't always had that in our careers. And everything that we did with Homebrew is selfish in nature, right? We could have done lots of different things, and the reason we designed it the way we designed it and practice it the way we practice it is so we can surround ourselves with people that we're proud to associate with.
So basically, you're saying, so startup founders, if you go pitch Homebrew, at the end, if Satya give you a hug, take it. Don't run away. So right now, I think at this meetup event, one thing that I love is we have a lot of people travel here from outside the valley. Raise your hand if you are not from here, just got here. All right, good amount.
Wow, that's cool.
That's really cool. That's one of the things that you can meet anybody around the world. So say if I'm a founder, say of next Airbnb or Dropbox, just got to the valley, come to this amazing event, but has no connection to any VCs. So what would be the best way to get a meeting with you? Or what would you advise with other VCs?
The best way, no question, is a warm introduction. I mean, it's just the reality. I wrote a blog post about this too. Is a warm introduction is the way to go. And if you can't manage to find your way to Jay or somebody else who's connected to us via Twitter or Facebook or LinkedIn, then to us that's a signal too. That said, we respond to every cold email we get, and we've done 2 investments now from cold emails out of the 21 that we've done. But the reason that those cold emails stood out is because those founders had done their homework, right? And not only had they done their homework in terms of what are the types of things we like to invest in, who are we as people, and what are the things we've written about that might reflect what they're doing in their companies, but they had also shared real data or a real demo that we could react to. So if you're going to do something cold, make it the best damn cold email you've ever written, right? Like, you should want to give yourself money after reading that email. But the best venue by far or best intro by far is a warm one.
So you recently, well, I don't know if it's recent or not, but you wrote a blog post called "Make Them Believe," which is about startup fundraising, right? Yeah. And pretty much talk about, as a founder, when you talk with investors, it's about emotion. Right, and talk to us about some advice that's not so obvious to founders. How would you advise them in terms of fundraising?
Yeah, I think lots of founders approach it as if it's a rational decision, but it's completely irrational to invest in startups because startups fail. 99% of them fail. So you have to appeal to the emotion of the investor that you're talking to. And without that emotional resonance, you're not going to get anywhere. And so ultimately that, at least for us, and I think for a lot of investors, every investor will tell you the most important thing in making an investment decision is the people, right? So somehow your story has to come across, and it has to be clear why you're the absolutely best person in the world for addressing the problem that you're addressing. So that's first and foremost. And then secondly, it has to be a problem that the investor can relate to. I think it's no accident, and it's not right by any means, but it's no accident that minorities and females have a hard time raising money. And it's because many times that their points of view or the problems that they're addressing are unrelatable to the vast majority of investors. That will change with time, I hope, and we're trying to do our part. But this speaks to the broader issue of, like, if you want to raise money, you've got to have a personal story, or you've got to have a team, you've got to be a person that really appeals to the investor, and then you've got to be focused on a problem that is relatable for them and you can convince them is big. So that's why doing homework on potential investors and really approaching the right ones and not approaching everybody makes a big difference. Just like you have focus in building your company, you have to have focus in fundraising for your company too, and that's how you're going to have the most success.
So talk to us about. You talk about like investors. If it's a problem that investor can relate to, it seems natural that they can understand it and they can make a decision faster, hopefully. But there seems always to be a kind of sort of balance, because for emerging space like VR, like drone, like food tech, for those emerging space, not every investor, not a lot of investors have exposure or knowledge
Yeah.
about it. So,
Don't talk to those investors.
Don't talk to them.
Yeah, you're probably wasting your time, right? I mean, there are plenty of investors who have blogged about, tweeted about VR, AR, drones, Bitcoin, whatever it is. Go talk to those people who are thinking about it actively, who come to the conversation with a prepared mind, right? If you already have the hurdle of trying to convince somebody that this is interesting, forget about like the other things. You're going to be stuck. So talk to people who are interested in the space that you're working in.
And for you guys, how do you decide to expand your vertical, expand to the unknown vertical that you want to explore? Is it driven internally, or is it driven by the deals that you see?
Both. We tend to see things in waves, which is disappointing in many cases, but really exciting in other cases. We tend to be thesis driven, so we spend a lot of time trying to figure out, where are markets that we want exposure and what are the types of things we want to be investing in. And that's why we write things like, what are we curious about? So, people have some sense for the things what we might be interested in. So, I think you have to talk to people who come to it with a prepared mind, or at least you have some other way of relating to them or connecting with them. If it's not about the topic, it's about who they are or their interests or where they grew up or something that kind of separates you from a relationship standpoint from everybody else that they talk to every single day.
What's the best startup story that you heard?
The best startup story.
Oh, founder story.
The best founder story. So we are investors in this quirky little company called The Skim. Does anybody subscribe to The Skim? All right. That's not too bad. So we met these two women who came out of NBC News. And they were producers at NBC News. And they were really frustrated with the news industry. They just thought there was too much noise and not enough signal, particularly for millennial women. And so we met these two women out of NBC News. They'd been a year into starting this company, and they had built it on the back of MailChimp and WordPress. They were based in New York. They had never touched a line of code. And they had, at that point, in a year's time, built this little newsletter with 80,000 subscribers and 50% daily open rates. And they had done it in a particularly unique way. If you ever get a chance to subscribe to The Skim, you'll read it and you'll go, wow, this is unlike anything you've read in news, just because of the voice that they use. And the other surprising thing about it was that they had not raised any money, but they had all these incredible people in the New York media market helping them for free. Not advisor shares, not money, nothing. They were just like, you two are amazing women who have this vision for being, for one generation of women, Good Morning America was how they woke up. And for this generation of women, they wanted to be the place that women turn to. So they had this big vision. They had built this incredibly loyal, kind of rabid base at a very small scale. And they were the type of women that people would just follow and help. And we saw all of that, and people were like, well, that's a newsletter. Is it just like a next daily candy? And why would you invest in two women who have not an engineer on the team and don't even know how to talk to an engineer? There's millions of subscribers to that newsletter today. There's a team of, I think, 16 people at the company building this incredible business that will be even more amazing over the coming years. And those are the kind of people we want to back, right? So those are the kind of people who, by hook or by crook, because they just care so much about a particular problem that they're trying to solve, that by accident they create a company. And that's what we're looking for.
Yeah, that's incredible. Skim is it's a really good newsletter. I read that every morning. It's
and by
fantastic.
the way, we could not get a single other investor in the Valley to invest alongside us. We had to have a bunch of angels and a couple of smaller institutions in New York make that investment with us.
So was it a pretty difficult call for you guys as well initially, or what make the?
I mean, that's a perfect example of one where we initially disagreed, and then we did our work, and we spent time with the team, and we were incredibly excited when we had the opportunity to invest.
That's interesting. Do you use? Do you see, because in the Valley, in venture capital, you see a lot of herd-driven mentality. Like once something is hot, everybody want to jump on it. Once something is hot, you say oversubscribed, you drive that investor emotion, FOMO, right? So how do you guys react to that on the other end of the spectrum when the company has good traction, has a lot of investors interested in it? Do you guys kind of trying to get in there as well, or what do you see?
No, I mean, the reason that we have a fund of our size and we do the number of investments we do is to match with kind of our point of view around this, which is if we're only doing 8 investments a year, 10 investments a year, we're going to have 20 companies in the fund. We don't have to be in every great company. We just need to be in our fair share. And so we don't worry about missing out, right? We just worry about making sure that we see the kinds of opportunities we want to see, and that we work with founders who want to work with us as much as we want to work with them. And if we see eye to eye there, then there's an investment deal that works out, right, where everyone's a little unhappy. And that generally works pretty well for us.
How do you see Homebrew build out for the next 10, 20 years?
I mean, another reason the way we built Homebrew is because Hunter and I have been parts of organizations that have had to scale, and we've managed large organizations, and the beauty of doing Homebrew is we don't have to scale ourselves. So we're a team of 4. There's 2 general partners. There's a director of talent, who might be here today, and Tara, our director of operations. And we're pretty happy being a small, tight team. We're big believers in like the 2 pizza teams, and we probably have a 1 pizza team right now, which we're pretty happy with.
All right, Satya from Homebrew Ventures. Let's give a big round of applause. Thank you. And we have about 10 minutes to open up for questions. So raise your hand. Go ahead. So the question was, how does the founder know when to give up, right? Exactly. And I'd say as an investor, it's never our job to tell a founder it's time to give up. I think we have to share the data and share our point of view. But ultimately, as a founder, you have to trust your gut, right? I think there's no amount of like hitting your head against the wall that a founder who really believes in what they're doing won't get past. But at some point, like deep in your heart, whether this is going to work or not, or whether there's something to pursue, and you just have to trust that. I'm not a big believer in like even if there's some promising data or the data is going the wrong way, like that's going to give you the answer. The answer is in your own intuition. So that's kind of a soft answer, but I really do believe that's the case. Next question. Go ahead. We're like 10, 15 years away from the public markets at our stage, so it doesn't impact us. We don't worry about it. Go ahead, Dennis.
Well, I wanted to thank you for making my 6,000 trip worth it coming here, because I really appreciate your approach of building things bottom up and believing that technology changes the way people live. And my question, without going too far into pitching, is...
No pitching. Yeah. So the question was, do we think, kind of areas that have historically not been touched by technology, like politics, are those areas ripe for innovation? And the answer is yes, absolutely. We've done investments in
the obvious places: financial services, healthcare. We've also done commercial construction. We've done media. We've done, drones. I mean, but we see things in politics. We see things in education. We see things in kind of virtually every industry, and we're big believers that technology is going to touch them all. It's inevitable. So yeah, absolutely.
Go ahead.
Hi. The question is very easy. It's like, what for you is the next big thing? Like the next melting pot of innovation?
So the question was, I don't know, that's an easy question. He started by saying, this is an easy one. He said, what's the next big thing? So I'll tell you something we're curious about, which I don't know if we've added to the list yet. So I think many of you know that the entire kind of consumer investing world and even the consumer world is fascinated by these new products that are text-based interfaces, Magic, Operator, all these kinds of things that let you interact with a service via text. And we believe that much like on the web where consumer interfaces drove enterprise behavior, that the enterprise is going to be the interesting area where these text-based interfaces supported by AI and machine learning are going to provide some really interesting applications and services. So that's something we're thinking about a lot right now.
Next question.
If you're investing in a company that sells to SMBs, what's the dollar value that you think that they should aim for as a monthly recurring revenue to make a sustainable large business? And is that $100 a month, 200, 300?
Yeah, so the question was, if you're investing in a software company that targets SMBs, what's the right monthly price point to target? And the answer to that is, depends how much it costs you to acquire them. Right? And how long they stick around. So there's no right answer, right? It's math. And you just got to figure out what your math is.
Next question.
So looking back at the number of pitches you've heard, which ones have been the most memorable and why has it been the most memorable?
Question was, of all the pitches we've heard, which has been the most memorable and why? I won't name one specific one, but yeah, I will. One of the pitches we heard that sticks in my mind is for a company called Honor, which is a technology-enabled service for providing non-medical care to elders in their home. Started by a guy named Seth Sternberg. And the reason that pitch sticks out in my mind is because he had a very personal story that he tells about his mom and dad for why he started the company. He doesn't come from that industry, right? He started Meebo, which was acquired by Google. He had done an incredible amount of work around the market, and he had a very different point of view on the market than all the other people that we had heard from who were targeting that market. And he had a product vision that was narrow in focus to start, but grand in the long run. And for all those reasons, we got really excited, and we participated in that investment that was led by Andreessen Horowitz. And he's off to the races now, and we couldn't be happier to be involved with him. But there are many stories like that amongst the companies we've funded, and even in some cases companies we didn't fund because they didn't fit for one reason or the other. But we were like, these guys are going to do something amazing, and there's probably a better investor for them.
2 more questions. Go ahead.
What does your typical workday look like?
What does our typical workday look like? No day is typical, is the short answer. It's some combination of meeting new companies, working with our existing companies, and focusing on our own internal operations. I like to split that time 60% on our existing companies, 30% on new companies, and 10% on our operations. So that's at a very high level, but each day is very different.
One last question. All right. Well, 2 last questions.
You had mentioned that you invest by consensus,
Yes.
and you're a two-partner fund.
Yes.
I found it very interesting. So you don't agree out the gate on an investment. That's what you said you guys don't invest in. So obviously you guys stand on one agrees and one doesn't agree. So it must be so hard to give up your own perspective or to get the other person to agree with you.
Yeah, so the question is, with 2 partners, how do you get to consensus, right? Because one of you has to change their mind. And that's the beauty of a partnership that is founded on trust, right? With any co-founder, whether it's in your company or in our case, our firm, it all starts with the foundation of trust. And if you trust that person and you're willing to listen to their arguments and realize that they're coming from the right place, right, not coming to attack you, not coming to prove you wrong, then you open your mind to being convinced differently than what you believe. And I'd say Hunter and I have this incredible amount of trust and respect for each other's thinking, and we try to remain open to the possibility that either of us could be wrong. And then, we do our work. We spend a lot of time with the teams. We do market. I mean, even at the seed stage, I know diligence is passé, but we do it. We talk to customers. We do market references. We do references on the team. We spend a lot of time with the teams before we invest. And that's how we get past the initial impression.
One last question.
Consumer movement market what metric excites you, and also what's the growth rate you want to see?
The question was, in the consumer mobile market, what excites us in terms of growth rates? What metrics? Again, there's no one right answer to any of these questions, particularly not mine. But what we like to see is month-over-month growth in active users. It's less about percentage and more about velocity.
All right, one last question from our volunteers. Go ahead, Donna.
So much for tonight. Such a great event. So my question is for you and also for the founders in this event. When you are hiring, what kind of soft skills that you're looking for the candidate, from the candidate?
So the question was, when we're hiring for our companies, what kind of soft skills do we look for? We're big believers in this mantra, which maybe not everyone agrees with, that attitude is much more important than aptitude. And so we'd much rather bet on somebody who has like the right attitude but not necessarily the right experience and bet on that person, as opposed to somebody who's got the perfect background and has been at Facebook and Google, but is and he or she is an asshole, right? And not everybody sees the world that way, right? They want the absolute, 10x engineer, regardless of what that engineer may be like. And so when we think about soft skills, it's, I would say most importantly, is trying to get to the bottom of whether you're going to trust this person. Because if you trust that person, like, you're going to give them all the freedom in the world to operate, and they're going to make the right decision without your guidance 99% of the time. And so that's what we look for, is this person trustworthy? And there's, all kinds of ways of sussing that out. But fundamentally, that's what we're trying to figure out.
Awesome. We have 3 quick self-intro, 10 seconds. If you want to do a shout-out, introduce who you are. No pitch, 10 seconds, 3 slots. Who want to go? Go.
Hi, my name is Andre. I dropped out of the University of 20. I'm going to make school right now to your software development program. I'm looking to get in touch with anyone who has experience getting into one or knows anyone, and that's it.
All right, awesome. You can speak faster. Go ahead.
My name is James from Electronics from Boston, Mass. And making a device that keeps sound to the body, so you can listen to headsets and earbuds. And I'm here in the Silicon Valley to see if this is going to be my second home.
All right, awesome. Welcome. Go ahead. Last one.
My name is Pedro. I'm the founder of Rocket Check, which is an open source solution of Slack.
All right, awesome. Open source Slack. That's good. All right, well, thank you so much, everybody, for spending Monday night with us. And thank you, Satya, for spending Monday night with us.